welcome to Zoom at 8. Tonight, I'm excited to interview and bring to your attention Cody Davis and Christian Osgood. I mean, these guys are fantastic, and I'm so excited about it. But I want to introduce you to Zoom at 8. Hey, if you're new here, I welcome you. We've been doing this for over 3 years. I mean, it is the place to be every Tuesday night. Again, I'm Julie Ann Peterson, and I am your host tonight. I'm also a loan officer, senior director at Old Capital, and we are specialists in multifamily finance. We've been around for 36 years. That's a long time for a broker. You know, the great thing about working with brokers is like I have a trench coat and I can go to a bunch of different lenders than having you spend your time picking up the phone, calling a lender. And you know how long that takes? Let us do what we do best. Okay, so think about letting us help you. We look at your T12, your rent roll. We have conversations before you get into a deal. What's going on in the market? What are we seeing? Whether it's agency, are we looking at bridge? Would bank be your better solution? So those are the conversations that we're going to have if you give me a buzz, and we'll talk about the strategy and how we can help. I also help in bringing sponsors to deals, insurance, attorneys. All of those folks are part of my team. They're typically here, but we've got a small bunch today. And so when you come to Zoom at 8 and you work with Julie, you get to utilize my network. You know, I've also been known to bring capital to a deal. So I have the equity partners that come along with me. Open up the 9 little dots and bring it to speaker view. Oh, look at that. Sharada is on my screen. I don't know if she's on yours. But tonight I'm excited because we have a second featured speaker tonight. Cody Davis is also here with Christian Osgood. And they're coming to you because I thought it would be so fantastic. Number one, to check back in with these young investors. Cody got started, I think you were 18. I know you're going to go through that, Cody Davis, when you got started, but Cody lives up in the Seattle area, Tacoma, and he has been investing in smaller multis, so 5 or more. And he spends a lot of time finding investors, finding opportunities where you have seller financing. So I'm excited to figure out how the heck you find these, how do they all take place? And Cody's going to share that information with us. And then Christian Osgood is also up in Washington, or at least he's from there. And he talks about building relationships, finding deals. And the two of these guys have built a partnership that is solid. And I want to talk today about partnerships, because, you know, you never know who you're getting in a deal with. And it's so important, so important to vet these people. We've heard from some of our other presenters who have shared their challenges, and Cody may want to share his, just so that you understand what it takes to find a great partner. So Cody, Christian, welcome to Zoom at 8. How are you guys?
We're doing good.
Yeah, doing great. Thanks for having us on.
Oh man, it was so nice to see you guys over at the DML, which was the Deal Maker Live in Dallas. You guys, I know Cody got up on stage. I mean, you're kind of a superstar now, Cody. What do you think about all this?
I don't know. There's always a person behind the person. Christians helped me get there. So
yeah,
it's been a lot of work and a lot of fun.
Yeah. So I want to know, I want everybody to know who Cody Davis is. I want to know who Christian Osgood is. So Cody, can you tell us, you were born, you know, in Seattle, how you got involved in this, who's inspired you?
Yeah. So I got started investing in real estate at 19 years old. I got interested for the very first time reading Rich Dad Poor Dad. I think I was 14 or 15. Got super pumped up about it. Realized I was 14 years old, couldn't buy real estate. So booked back down, eventually ended up going to community college, dropped out 2 quarters in to get my real estate license. And 9 months after I got my license, I bought my first seller finance 12-plex, which was on the market for almost 2 years. I bought it with a signature. I had no money out of pocket to buy that thing. And since then, I'm crossing 3 months of ownership this October, or 3 years of ownership this October. Since then, built up to 105 rental apartments here in Washington State, and working on being under contract on another 107 right now. So,
Wow, 107. So a total of 212 then?
yeah, it'd be at 212. 20 of it would be a seller finance waterfront resort. So it's a little different, but we could dive into that later.
Yeah, well, let's talk about that soon. All right, Christian, give us your lowdown.
All right. Well, I started a little bit differently than Cody. I graduated college, went and started a nonprofit, had the wrong partners there. And so that crashed miserably. And that kind of had me a little bit just burnt out on the entrepreneurial thing. So for 7 years, I went into sales, always wanted to be involved in real estate. So worked my way into the CoStar group. And they own apartments.com, LoopNet. If you're not familiar with CoStar, the corporate company, they basically own the internet for commercial data. Worked there for 4 years in various roles on their lands team, apartments team, LoopNet team. And it took me 4 years there to really realize I was on the wrong side of the table. I'd meet with all these different owners. I'd consult them on how to utilize data to find and negotiate deals, how to analyze stuff, advertise properties. And every time I sell these huge contracts, I'm like, wow, I wish I could afford one of those contracts. Well, turns out I was just on the wrong side of the table. So 2020 hit, the world started shutting down. I finally bought a duplex, just conventional purchase, low down, but purchased a duplex over in Bremerton, Washington, about an hour from where I live. Around that time, I was working at the same company as Cody, left CoStar, and Cody's like, hey, there's a duplex available across from my 6-plex. You should buy it. I looked at it and it was a really ugly, underperforming duplex. It looked like a fun adventure. So I was like, okay. Bought that 0 down. I actually got that 101% financed with hard money, renovated it, and released it at a little over double what it was originally making. Ended up being a stellar little deal for me. And from that point, I kind of realized, hey, it's time to scale a little faster. I had set the goal of I want 30 units by 30. At this point, I was 29, so not a ton of time when you're sitting at 4 units. So Cody and I got back together, and he's like, well, there is a 38 unit on market. It wouldn't get you to 30, but it would get you to 42. And so we did that one together, and then within months, 6-plex, 12-plex, 7-plex,
Another 6-plex.
we kind of took off from that point. But that's my backstory. I started corporate. I bought small one more time, and then I found it's just as easy to buy 38 units as it is 2. And we started scaling at that pace. I'm at 95 units today. A majority of those are owned with Cody, with the exception of that first duplex.
Wow, you guys, that was, I think that was 2 years ago, Cody, maybe that you were here. So you're 22? You were just 21.
22 now.
Yeah, so a year and a half ago, I think you were here, and you didn't have all those assets. So you're going at a rapid pace. Amazing, amazing. So let's talk about how are you getting these done? All right. So we heard about the duplexes. You had some money on that first one. The second one was nothing.
Mm-hmm.
Now in single family, yes. Okay, we hear a lot about that, and okay, you got hard money, blah, blah, blah. In multifamily, we don't hear as much about this owner financing. So I want to hear, and I want you to tell our listeners, because this is a big key. People come in, they want to use other people's money. How are you finding these deals? What is the conversation with these owners? Kind of unpack that for us, because I think you have so much experience in this, and you really make it possible. You make this dream possible for so many people. And I want you to really help us understand that.
Yeah, so we've got a lot of principles when it comes to buying real estate, and you'll hear some of them throughout this. We've got about 35 of them. But one of them is you have to have an objective going into a conversation and a takeaway coming out, because it keeps you focused, and then it also keeps you intentional on the back end. And so a lot of people, their objective is to buy deals. And that's the reason they never buy any deals, because they're just focused on that. I'm not focused, and now I becomes a we because we're a partnership on all this stuff. We're not focused on buying deals. We're focused on learning how people got to where they're at. Because I can learn more through the story than the real estate. The story is always worth more than the real estate. So I call someone up and I'm not asking them to sell to me. I learned how they got to where they're at. I learned the pitfalls that they faced. I did this, and I don't even need to buy from all of them. I don't hope to buy from them because that's not my objective, but that's how I met in person for the first time with Brenton. And we had been talking online, saw a picture of him that he posted, his real estate headshot with a Speedo. Super great marketing. It's all over Facebook.
I'm going to look at that, man. I maybe should put that in my back on the back here.
It's great marketing. Then he's got his hat and the tractor. But we were talking online, and then I just asked if I could fly up, and then the schedule didn't work. And then he said, hey, I've got a party. And so I came up and stayed the night at his place in Colorado. And I learned more about his story, what he did, some of the hows of how he got to where he's at when he traded up. And just by doing that with a whole bunch of different owners that I didn't intend to buy anything from, I don't want to buy in California, but I can learn bits and pieces from that story and then apply that on future real estate deals. The goal is to learn how to go apply a whole bunch of different techniques, creative, take the best pieces from everyone's story and use it to build my own. But as a result of going and meeting with these people, built a relationship, and the unexpected benefits that came from that is a lot of them ended up selling properties to me.
Yeah, jumping off that, we found that with owners, it's usually a relatively tight-knit community. There's not a ton of people in a given market who own everything. Now, if you're in a huge city like LA, obviously you break that into sub-markets, but in a given area, there's only so many players. And so we invest pretty heavily in Central Washington. We keep that portfolio fairly tight over there. There's only so many people who own real estate. There's a few whales, and there's a few people who own a few buildings, and a couple people who just own the one asset. We have I guess it's more of a philosophy of like, let's try to meet with at least one new person every week. It's usually 1 to 2 new owners every week, but we're never looking for a deal. It just turns out if you meet with 52 new people in a year who all own in that market, and you're talking about their goals and they're learning about yours, when everyone knows who you are and what you're doing and you know all their pieces, the opportunities just present themselves. Like the pipeline's more than we could realistically close, but we never went after a deal. And those relationships are where we have the trust to do things like low down seller financing. They know how we operate and they know who we are. We're not just someone who called them asking to sell a property. It's completely different from how I think a lot of people are doing real estate, especially out of the BRRRR community, the wholesale community. Yeah. Nothing inherently wrong with those by themselves, but the marketing for that is, hey, are you interested in selling? Are you interested in selling? And that's just not what we're doing.
So you get somebody on the phone, you have looked at who owns this property. At least that's what you think that person is owning that property. Not always is that the owner of the property. It's the attorney, it's the uncle who doesn't want to be in, they've worked out people to get in front of that owner. How do you get to the owner? Do you find that to be difficult?
No.
Okay, tell us more.
Yeah, in certain areas are harder. I've heard a lot of folks out of California say some counties you just can't find info unless you pay for it. That's tough. But in Washington, it's incredibly easy to find contact info. So I've done the same thing for Texas and a few different states throughout the US that I was looking at real estate in. But I found that about 99% of the time I can figure out who owns it within 3 minutes or less. And we can find contact info for those people in under 5 minutes, and if not 5, 10. It's very easy to find most people if you know where to look.
When you're asking them, hey, we're investors. We'd love to visit with you over coffee. I mean, how does that conversation, can you tell us a little bit about that?
Yeah, so it starts with a relatable point. That's why Christian and I work so well. We've got relatable points, we've got similar goals, and the significance behind those goals goes a long ways for us. When we're calling someone else, we need to book a meeting because there's nothing we can say or do over a phone call that's going to have them build a relationship with us. It just won't happen. So I want to put a face to the name. I want to get in person. And so it starts with a relatable point, because relatable points, pieces from your past, come into the equation and they get you to the table. They get people interested in actually going up and meeting. So I just bring up, hey, I saw you own the 12-plex. In my case, one of the calls I'm making today is, hey, we're property neighbors. I saw you own this. I did this in our Seattle deal. It's like, hey, saw you own a 4-plex. I lucked out. One of my 12 subscribers just seller financed a 7-plex to me, but I saw you actually owned a 4-plex nearby, and I'm curious how you did that. I got lucky. Relatable point.
Okay, and they were open to visiting with you.
Yeah.
They didn't say no, thank you, and hung up.
Nope. Typically, I want to say probably 90% of the people that we've called have bet out. Might be more than that.
Yeah.
Yeah, most people do.
So on a daily basis, do you have a certain amount of people that you want to be calling? Is it?
No,
Okay.
we don't do the 300 to 500 call thing. I mean, I'm sure
Right.
Christian's done that at CoStar, but I hate that.
Yeah.
Yeah.
I'm not trying to do that. That's like banging my head against a wall. I don't really want to do that. So I'll make maybe 100 or 200 calls a day, maybe. But
I was gonna say I probably do about 5 a week.
Yeah.
Oh, 5 a week.
It's not a lot, but we're also very precise. I mean, we're very calculated and efficient. Where most people can make 5 calls, they won't even reach the people. We've got really good contact info, and these people either pick up or they call us right back. And I thought it was luck in the beginning, but it's just worked on so many different property owners that the method has been proven. It just works.
Amazing.
It works in different cities. It works in different states. Caleb and Chuck, I mean, they're doing so many different seller finance deals in Texas. It works everywhere.
There isn't that interesting. So a little bit of sidebar there. Caleb calls me looking for, I want to buy these. I'm 18 years old, by the way. I'm 18. I have no money. I'm like, you need to talk to Cody. So Cody got with Caleb and Chucky, his buddy, and now they're buying assets. It is so cool. I love to be part of that. I'm proud of being able to connect you guys. That's what I do best. And having you show him the ropes. It is amazing, you guys.
It's been a joint effort between the two of us, but I mean, you don't have to syndicate to get ahead. They're just going to go seller finance their way to. Dave Ramsey says you can't borrow your way to wealth. I disagree.
There you go.
They're about to close on their first deal, and they've negotiated it where they're getting paid right after close to buy their first deal, and it cash flows really well.
They're getting paid $110,000 to buy a 10.
That's unbelievable. We need to know more about that. But let's talk about, so you have a conversation and you're getting to know these people. At what point are you turning this into, hey, have you ever thought about selling one of your assets using seller finance? How does that come up? Because most guys want to get out. And what are you offering them? Is the rate that much better than them trying to sell it on LoopNet or Yardi or whatever?
Well, in regards to the rate, we've borrowed from 3% to
6.
to 6 on most of the notes. So the rates are either great or at least competitive. However, most of the deals, I want to say it's not as much about the term, other than we like to do things lower down payment. It's just easier when the seller will finance more. It's easier to multiply less money. That's one of the biggest things for us. So we don't really negotiate off price. The interest rate isn't the biggest deal to me. What we're looking for is 2 things. How do we own it? And how do we never lose it? And we never lose it through cash flow and long-term debt. So if we can get those 2 pieces, I care a lot less about the price and the other terms on the deal. As far as how we are asking for this, I've personally never asked someone to sell a property. Well, I did when I was learning how to do this, and they said no. But
Bad model.
yeah, we really do.
Redo.
I just asked.
Try that again.
What's that?
No, you want to go back to that guy and say, no, that's not what I wanted. I didn't want to ask you how to do it. Do you want to sell it? Let me do it. Take a redo, right?
I did that. We just bought one of the best deals we've ever purchased because I called him back. It's like, hey, I was that 19-year-old who butchered the phone call. And I asked to meet him in person, and then he ended up offering to sell it to a phenomenal price.
As soon as Cody stopped asking him to sell the property, he went, hey, by the way, that property you called about and asked about years ago, do you want to buy it?
Yeah, but back to the transition, you know, how are you actually getting that? Once you've shared your goals, you learn about theirs, you learn about their story, they learn about yours. As Christian was mentioning, it's not, hey, would you sell? It's like, how would you recommend I go do something similar? It is just that simple.
How would you, so that's the question. How do you recommend?
Yeah. How would you recommend I go do something similar?
Oh,
Yep.
okay.
It's two parts. How did you get to where you're at? And then once you have their story, how do you recommend I do something similar? More often than not, they know someone else who has some opportunity. It's not usually the person you're meeting who wants to sell you something. We meet with a lot of people who are also in the build portion of their career. So they're not trying to unload stuff. And that's a strategy that we resonate with. We don't sell real estate. I would consider selling a duplex to roll up into a 12-plex. I've done that once. But as a general rule of thumb, if we buy it, we plan on keeping it forever, and we probably will. Most of the people we meet are the same way. However, that resort that Cody referenced, it's a good friend of ours who's also buy and hold. He looked at that deal, gave us a call and said, this is the wrong deal for me, but I think it's the perfect deal for you. Because of that relationship, another deal came out of nowhere for us that we're actually really excited about. I think it has some potential.
Well, that's truly, it's the relationships that are, coming to you just out of goodness and goodwill, right? I mean, that's fantastic. So again, how do these guys say, yeah, I'm interested in selling. I'm going to do seller finance. You put it, give them an offer after they've decided, yeah, hey, I would, be interested in taking a look at your proposition.
Yeah.
They stay in the deal. Do you give them general partnership?
Nope.
No.
Lender. So you can look up any of our deals. We have a deal map where every deal we purchased or pending on is on a Google map, because I love Google Maps. Every property you want to buy is on there. They end up just being a lien on title. We're in a lien theory state. So they just become a lien on title. They're essentially just a lender. It gets listed as private lender, private individual, or contract to sale. Depends how you structure it, but they are not on title with us.
So these assets you're buying, what kind of condition are they in?
So we've bought Class D and upgraded it to B. I mean, my goodness, that was awful. That was our worst property we ever bought. It'll make us more money than anything we ever bought too. And it's now becoming actually quite nice. But we have a lot of Class B, like solid stuff. My first property ever, been doing upgrades to that, and that's really nice. Right next to the church, the school, Microsoft, phenomenal location, really pretty building. Some of the stuff that we bought together, we've got really nice small multifamily, just side by side duplexes that basically own the whole city, or not the city, block.
The block.
Those are pretty.
Yeah, those are great.
But I would say a vast majority of it was seed acquisition. If they're C, we rapidly increase them to B, and we go and we really do renovate them very nice.
Are you getting hard money for those then, Christian, to renovate that?
We did on 112-plex for the roof. We just did it's a total of $350,000. We did cash out hard money.
Yep.
But
a lot of them are out of cash flow though.
Yeah, we write the notes where the cash flow is significant enough in comparison to where we're at, to where we can just keep funding multiple renovations at once.
Amazing.
But we've done about 100% reinvestment. Cody and I have paid ourselves enough to buy groceries one time. But But I mean, I think out of our portfolio, we paid ourselves about $10,000 throughout the last year.
And
All those properties, it just reinvests every single time. When we have the money in the property, it's like, hey, let's go paint another building. Let's do another interior. We're really focusing on getting a gorgeous portfolio of very stable, updated properties.
Now, do you have any investors as well, or is it just the two of you?
so, I
using-
mean, yeah, the really big stuff, it's just us. We've got a couple people, and by a couple, I mean like we max it out at one person per deal.
Oh,
We have the duplex deal where we just got side-by-side duplexes. We had somebody come in and everybody, Christian's known them a little bit longer than me, but they put in money and we're going to cash them out in the next 2-3 years, and then it'll just be ours because that's all they wanted to do. Want to be part of something that made money. So we did
so
that.
what about that for the future? I mean, are you guys thinking about bringing on investors, doing syndication? What's the plan?
We won't be doing syndication.
Mhm.
I think the story is more valuable if we do it without
Mm.
syndication, because I was documenting on YouTube before I even knew Christian. Christian, I partnered on our first 10 months ago. But I've been documenting since like day one, when the videos were edited every 3 seconds
Yeah.
for a minute long video.
Yeah.
Yeah, I didn't know what I was doing. But we've documented from absolutely nothing to when we first partnered, and it was super grainy video, and Christian was super slow on camera, and that's how I was on my first videos. So I mean, just we've gone from absolutely nothing together online to something. And I think the story, and this is a common belief between us, is that the story of doing it this way is worth more to more people than if we bring them in as investors, because it shows that it's possible. And now it's getting duplicated with 18 and 19-year-old Caleb and Chucky and our buddy Evan, people that don't have money, that are going out and about to buy. They're probably going to buy $10 million of real estate in the next 8 months with nothing. It's crazy, and they're not going to syndicate. We value that story more than bringing investors in, because it'll help more people in the long term.
Mhm. And I do like when we purchase a deal, I like Cody and Christian own 100% of the deal. If we brought in one partner, we almost always do 33, 33, 33 with a buyout clause for the other party. I like being, hey, we are the people who own the property. In syndication, or hey, I'm going to get my 20% carve out. I have an obligation to sell this deal in 10 years. A lot of it doesn't fit as well into our model of
How do you buy it? How do you never leave?
Yeah. And if you can figure out how to buy it, no money down, you don't need to syndicate. And so that's been what we've done. We've done it over 13, 14 opportunities now that we've closed on.
Multiple deals, and there's no size cap on this. We're looking at a 432 unit seller finance deal in
Houston.
I don't know, Houston or Dallas. It was somewhere over in Texas. Texas is its own
Amazing. Well,
United States.
there's going to be a lot more opportunities for this type of lending, because these sellers are going to need to get out. So I think that you're going to see a lot more structuring things to just get a new buyer in there. So I'm sure you'll be wrecking in some more units. Now, let's talk about partnerships. Okay. You were doing this all on your own, Cody. I know you had a kind of a mentor that was maybe a partner, not sure.
Well, I mean, he was partnered. I ended up cashing him out. He ended up stealing a lot of money, and by a lot of money, I mean, it was closer to 7 figures than it was to 5. But that was a painful experience. Lost a lot of time, lost hair, lost money. And real estate, I had to sell out of a lot of real estate to pay off obligations that he took on. But I got him cashed out, and since then, I mean, I've been through the ringer on some bad partnerships. That was the main one. But with Christian, it's always worked.
What is the secret sauce to that? Because not everybody can get along. I mean, you guys are obviously have figured out what your position is in the partnership. Each one of you brings something very, very special. So, Christian, what is your specialty in this relationship?
My specialty in the relationship, one of the fun things about our relationship is we both have a sales background. Between the two of us, I will admit Cody will probably outsell me in most situations. I might out-negotiate him, but he's a very, very good salesperson. So put him in a role where he typically goes out and brings in fish. So when we're talking about deals, Cody brings in a lot of them. That being said, I still get to bring in some really fun opportunities. And when I do, there are typically home run deals. So we both have that skill set. Cody specializes in that. I specialize in the boat building. I have a bit more of an operations background. I went to college for it. My dad was an operations manager for 25 years. So when we're setting up, like Cody's 22, it's amazing what he's done. And he is the best real estate mathematician I've ever met in my life. That being said, he hasn't had enough life to learn how to do everything. So, yeah, some of the partners call him Baby Yoda. He does mostly nothing most of the time. And then you bring in a real estate deal and he just is super powerful. He's like, seller financing, it's done. But some of the stuff like, hey, we actually do have to pay our taxes for accounting. We started 3 companies together and bought 100 multifamily units in a 10-month period. There's a ton of back end that I get to sit there and figure out. So I do a lot of the hiring, a lot of the actual accounting meetings. I do more of what we call the boat building. He brings in a bunch of fish and I go, this boat is not big enough for that much fish. And then I build out the boat. And sometimes I need Cody to grab a hammer. And so we interchange. So that's long story long, what makes the relationship work? You asked about the secret sauce. You have to have a partner that you can trust. My first partners on my first venture was a nonprofit. I was starting a church in Seattle. But all the wrong people, and they stole the $4,000 that I had. Fortunately, I didn't have more. But it was an awful experience because they had the wrong people without trust. Cody's first partner, couldn't have got started without him, but also chronic liar. And that ended up not working out. Yeah, Cody's lied to me one time, and it was a little thing. And he called me an hour later, and he went, "I don't know why I said that. I was super hungry, and now I've eaten, and I feel terrible." And that is the level of trust that we have. I mean, that's when Cody says something's going to happen a certain way, he makes it happen. All that bad debt he inherited, he chose to take that on because he realized his other partner was not going to make other investors whole. He traded the properties for all that bad debt, and then he paid back every single individual.
Multiple 6 figures, start to finish. It was a little over 5.5 months. It was awful. But
meanwhile, you're eating macaroni and cheese.
Yeah, it was the right thing to do.
Yeah.
And you have a partner who you know will do the right thing, and you can consistently count on them doing the right thing. That is the secret sauce. At the end of the day, I know what Cody tells me is what he believes to be true, and that allows us to get through anything.
And sometimes it doesn't go well. Sometimes we'll snap at each other, and then I'll eat food, and that's better.
There you go. Yeah, got to have the mac and cheese and fries.
Well, I wish I could do that, but I'm lactose intolerant. But we know how to fix situations when problems arise.
And I'm very crabby when I get COVID. We learned that. So it's not always perfect, but we know we can get through it. We have a bigger goal. And at the end of the day, we align on goals, we align on significance, and that is enough to move us forward. That's the other thing I see derail partnerships. One person wants to go here, the other one wants to go here.
Yeah.
Back to the ship model. There are certain people you want on your boat, and that's not a lot of people. You want to keep that pretty tight. But there are people who can sail next to you for a while. You can have strategic partners. You just have to be very, very selective on the people you allow on your ship. And Cody is that person for me.
Well, that is such a bright, going through such a dark time with your partner, and it has such a bright, shiny partner now makes such a huge difference. We talk about values, mission, right? And vision. Sounds like you guys are very aligned on those things.
Yes.
And I know it sounds cliche, but there are so many people that say, "Oh yeah, I met him at a conference. We sat for coffee and we're going to do deals together." Or they come and say, "Hey, I need a sponsor. Can you send me one?" And I can certainly send over a sponsor, but if it's not a good fit, it's not a good fit. You don't answer my calls on Sunday, it's not a good fit.
And
So,
if you get lucky enough to get a great partner early on, I had to go through one that cost a lot. It was very hard. My dad thought it was going to sink me, and my dad's in. He works for Weyerhaeuser. He negotiates a lot of big numbers. I mean, these were big numbers for me. He thought I was just going to crumble. Coming out of that and actually finding a good partner, if you're lucky enough to find one, build quick enough to where if the partnership goes south, there's enough money to go around. And if you're going to have a problem in that scenario, I'd rather have a really big problem than a small problem. And so that's what we did. We scaled. We bought 8 figures of real estate that cash flows. Got a couple 7-figure companies now together, and the resort would be another one. We're trying to scale so big that the day that something doesn't happen or doesn't go right, there's enough money where we can just have it managed professionally by someone else. We walk separate ways, never see each other again, and it's fine. Now, we don't want that, but if it happens, we've acknowledged, okay, this is what's going to happen. And we have so much, I'm financially tied to him more than his wife is. His wife has 25% of the portfolio, and I have 50.
Wow, amazing.
So, but yeah, no, that's legit. So if you're going to even find a good partner, build quick enough and build a model that produces enough money to where if and when it goes wrong, you can walk away and never see each other again. And it can be managed by someone completely else.
So let me ask you a question. Are you guys managing then all of your assets, or do you have property management in place?
So part of the problem with the old business partner, he owned the PM company that managed my assets and stole a lot of my rents and my security deposits, debt for all that stuff, and bank accounts. We're never letting that happen again. So we started our own property management company. And
look at that. So
we've got people on payroll today. We're working on hiring more. I'm meeting up with someone tomorrow, and then we've got the PM meeting around noon. That is how we are mitigating some of that risk.
Yeah.
Just we're bringing it in-house. We got people on payroll that handle it. I went to one of my properties and saw a tenant, and my first couple properties, I know all the tenants because in the beginning I was doing it all. And they came up and said, oh, all the tenants are complaining. I was like, what's going on? It's like about the 800. Like, what do you mean 800? It's like the rents got raised. It's like, I didn't know this. And
really?
So rents went up from, $650, $700 to $800 across the board. And I didn't know. Payroll took care of it. It was amazing. So that is nice.
And our director of property management is the single best property manager I've ever worked with. So it is fun to build that team. I think of the decisions we made as a partnership. Starting our own PM as we had was the single best and most lucrative thing that we did, because when you have 100 units and you have someone else who magically is raising rent $200 across that entire portfolio,
it's a lot of money.
It is a lot of money, and it
NOI goes up quickly.
As is the value. It's
sure, absolutely.
crazy. So.
Okay, so 2 things. One, words of wisdom. What would you say to somebody who's just getting into this, or somebody who is looking for a partner? Give me, what are your words of wisdom?
Yeah, words for wisdom for looking for a partner. You cannot do a good deal with a bad partner. Absolutely impossible, always more expensive. Even if it's, say it's 0 down, it's going to cash flow $10,000 a month. It's your first ever deal. You're like, oh my gosh, I'm going to be rich. If you have the wrong partner on that, they will find a way to screw it up for you. You're going to wish you didn't do the deal. 100%. If you want just like a catchphrase for that, it is impossible to do a good deal with a bad partner.
Love it. Cody, what do you say?
My piece, I'll skip the partnership thing. I mean, it could apply to partnerships, but just because it makes money doesn't mean it makes sense, and vice versa. Just because it makes sense doesn't mean it makes money. A lot of people have great ideas, doesn't mean they make money. And just because something makes sense doesn't mean you should do it. It could make money, but I could make money with the crypto fish, and probably shouldn't, because it doesn't fit the long term. It doesn't fit that vision. I had a bunch of people in my sphere that were buying crypto, and they're like, you should do this. And instead I bought a bunch of real estate, yeah, crypto could have gone up, but at the end of the day,
It didn't.
well,
It's down
well,
70%. Terrible.
but even if it did go up, if it went up 70%, if my real estate goes up 70% and I put 10% down, I'm getting a 700% return. And I'm getting paid to wait for that to happen, and I'm getting the benefits. So just because something makes money doesn't mean you should invest into it if it doesn't fit the long-term vision.
Yeah, I love it. Stay focused on your vision. I mean, fantastic. All right, podcast. Tell us quickly. Tell us a little bit about the podcast.
Which podcast?
Don't you have a podcast? I see you on YouTube. What is it?
Oh, we have got
YouTube
YouTube.
videos.
Yeah, we got a YouTube channel.
Okay.
It's Cody and Christian Multifamily Strategy, and we do occasionally have people on there that we do interviews. So we run it kind of like a podcast occasionally on Friday. But essentially what we do is we've been sharing our rules of real estate. We have those 35 of them. So we've been launching that every Monday, just sharing. We wanted to document, like, everyone should have their own principles. They shouldn't necessarily be exactly ours. But these are the things that we don't violate. We are buying real estate and running a business. And so we wanted to put them on there online so that anyone could go back, look through this and say, this is what they don't violate, and they can call us on. So we wanted to publish that. That's Mondays.
Wow.
Wednesday, we call Whiteboard Wednesday. We just answer 5 questions from the comments on our YouTube channel. We just moved that to live. So now we get some live questions as well. But that's just a time where you're just going to sit down, engage with people, share a little bit about what we've done, and hopefully help other people move forward. Friday is our day where we get to do whatever we want. So it could be interviewing someone. It could be, we didn't get a lot of views last month. Let's shoot something the algorithm's going to like. More often, we'll get really inspired by a concept, or we'll do a really creative deal, and we'll take that time to share, like, hey, we tried something new, it worked, and we want to get this to you guys immediately. So we'll put that in a Friday video. But that's what our channel is. It's purely, let's share what we did with as many people as possible, because you can do this anywhere, any price, any market, anytime. And so it's our just documentation of what's possible in creative finance.
Awesome. So how do we find that YouTube channel?
That is Cody and Christian Multifamily Strategy. And if you Google either of our names, it will come up. Cody's BP podcast might come up too, because that got like 700,000 views.
No, I got less than that. It's closing on 600.
No, either way.
I love it. You guys are awesome.
If you Google us online, the channel absolutely will come up, either of our names. But it's Cody and Christian Multifamily Strategy.
Okay. Awesome. How should people get a hold of you if they've got? I've got some questions. I know we saw some questions in the chat, and I want to go back. But before we go through that, how can we get a hold of you? What's the best way?
Yeah, we're on Instagram. I think mine's Cody D 2020.
It is.
It is. Okay. So Cody D 2020. Christian is Christian Osgood, because he has a less common name than Cody.
Yeah, that was helpful.
However, you can reach us there. If you look at our YouTube channel, we show how to find anybody's phone number online. We've done this, find people like Elon Musk, Jordan Belfort, go down the whole list. You can find anybody's phone number online. If you watch that, it'll take you about 27 seconds to find my phone number online. Do the same with Christian. So if you want to shoot us a text, watch that video on YouTube and shoot us a text message.
Awesome. Awesome. You know what? Let's open it up. Does anybody in the room have a question that they can't live without the answer? Probably Will, because Will's just as young as you guys and really been working super hard to underwrite and look at deals and be inspired. I'm sure, Will, you're inspired by these guys, are you not?
Yeah, I mean, I heard Cody at DML, and I was like, damn, this guy's go-getter. I mean, it definitely had that vibe, but I was like, damn. I mean, I thought I was young in the area, but no. So that was very inspiring, both at DML and this presentation. So thank you for that. I guess one thing that I struggle with doing seller financing, not just for duplex or fourplex, but going into more commercial, is that I don't really know what the right question is to ask. Because what I do right now is whenever I talk to the broker, I ask them, hey, one of the same questions that I always ask is, hey, is the seller willing to seller finance? And in my head, the word seller finance really just means the seller, it's definitely open for interpretation for whoever you talk to, but they are working as a lender, so that they don't need the lump sum right now. But what's stopping them from asking that lump sum? What do we have to bring for them to tip that across, or tip that over, so that, hey, it's okay, even if I don't get that lump sum, I can work with these guys. What kind of action or questions do you guys end up asking to give that extra for that seller?
Sure. So if you're calling up a deal and let's say it's on the market, you're just talking directly with an owner, you're talking directly with a broker, or are you looking to be cashed out, or are you looking to be paid over time? And would you rather get payments over time? Would you rather be cashed out? Price or terms, right? And you often don't get both. You can. We've gotten both on some deals. But that's the way that I'd approach it. Say, hey, are you looking to be cashed out right now? Would you like to hold a contract? That's the actual verbiage. I just keep it that simple. And they're either going to say yes or no. And most people don't ask, because most people think this thing doesn't work. And that's the reason people don't do it. They're like, there's no way that'll work. There's no way it's that simple. And it is. You just have to ask if they'd be receptive to holding a contract.
And that mindset also, just going in knowing, hey, these guys are going to do it, and probably you've been very successful. I mean, of all the yeses you have, I'm sure you've gotten quite a few no's, right? I mean, it's not all easy.
We've had a couple, but every single deal I've ever bought was seller financed outside of one. And shortly after that deal closed, they offered to seller finance a duplex to me. So I just wanted to see if I could perform on another deal. But everyone we bought from is seller financed to us.
Because at this point, you guys are the ones that are talking to the seller, right? There is no middleman, the broker. So you're able to, explain the benefits of having doing a seller financing on the seller's end. Because in my head, as an investor, it's like, why don't I get the lump sum if I have a property? Why don't I get the lump sum so that I can deploy that somewhere else? Unless you're an older lady or gentleman that just wants to get out of that headache and wants just consistent income.
I'm going to take the words out of Christian's mouth, but don't add steps. Right now, you're negotiating against yourself. Sorry, I took it. That's his line, but you're adding steps right now and you're negotiating against yourself. There's no reason to play that card, because they're probably not going to play that card.
Gotcha.
Most people think that you seller finance for the tax benefits. That's not true. People seller finance because it's easier to pass on a promissory note than it is to pass on a property, because their kids are less likely to screw it up. So there's a lot of misconceptions in the business. I just wouldn't go into it with any of those. Don't worry about what you would rather have right now, because you're not them.
Right.
Now I'd figure out what do they actually want and then play that card. But right now you're adding steps in the process that don't need to be there. I would keep it much more simple. Say, hey, are you looking to be cashed out, or would you rather hold a contract? And it is just that simple.
And in regards to who we're talking to, we prefer to work directly with the owner, because that is where relationships are made, and you typically have more opportunities at low down when you have more trust between yourself and the owner, because they are, as the lender, they're a partner on the deal. Partnerships need trust. That said, a lot of our deals are a broker will bring them to us. We just closed the Templex where that was actually at DML the day before Cody spoke. We're driving around Dallas. I got a phone call from a broker that we've never met saying, hey, congratulations on your Moses Lake deal.
If you remember, I called that shot on stage. We closed that.
But very similar talk track there too. When they come, hey, there's an opportunity. Well, what is the seller looking for? What are they thinking for terms? Would they be open to carrying a contract? The conversation looks very similar, whether you're in front of an owner or if it's a deal that is listed as seller financeable or a broker brings it to you. Same general line of questions.
Gotcha.
Love that. God, that's so great. Candace, what do you got?
I'm really curious about starting up the property management business. How many, and just because of I know that everywhere we're kind of short on workers. How are you getting these people? Are you using an agency? Like, where are you getting the workers to supply that employee base? And how many people do you actually have working for you doing that?
We've got contractors who do a lot of the work. We've got general maintenance people, but as far as the coordination goes, right now we've got one full-time staff member that handles the day-to-day operations. We're hiring someone right now that's going to be coordinating all the maintenance folks. But the way that we get people to actually help us out and want to work with us is we just pay them more. Our one full-time employee, she's going to be one of the highest paid property managers in the history of Earth. It's going to be great. And she's going to make way more money than she ever hoped to. And that's fine. Because if you want good people, pay more. And that's how we've approached it. We do the same thing with our contractors. Yeah, could we probably save money? Sure. But we're not focused on saving money. We're focused on growing and focused on cutting expenses by trying to pay people less, whether it's contractors or employees. We're not really focused on the thing that matters most, which is.
And as a result, we do work with the best people. Some of the people who started helping us out actually are some of Cody's tenants.
Oh yeah, some of my very first tenants who don't live at the property anymore. They moved out, but they do a lot of the handiwork because that's what they did in their life. And so that's where I sourced some of my first handymen. But we pay them more than they've ever earned before.
That's amazing.
Are you paying them like a 1099? You're subcontracting them is what you're saying? So yeah. All of your workers for your property management, they're not all in-house. You just have the one employee and then everything else is subcontracted.
Yeah, we're hiring more on actual full-time W-2 though.
Yeah, we'll expand to 2 more employees, one full-time boots on the ground in Moses Lake, and then we'll have one more locally, probably part-time initially, who's going to help us with more of the maintenance coordination. When we were at 50 some units, it wasn't too hard because we had to drive to Moses Lake all the time. Cody and I could do a little bit. One employee was enough. We've scaled to a point pretty quick where we do need more people because I just can't be needed in Moses Lake 3 times a week. That's a bit of a drive from where I'm at. It's about a 3-hour there, 3-hour back drive. So don't want to do that all the time. Otherwise my wife will let me know I'm not allowed to do that.
There you go. There you go. Candace, are you good with that answers? Those are good answers, right?
Yes, excellent. Thank you so much.
Yeah, great. All right, Jason, your last one up. We got to get to networking. What do you got?
Yeah, so Cody and Christian, I've actually made offers on a couple set of financing director owner, and one is still kind of ongoing still, and I'm curious, what kind of terms do you guys structure with your prospects? For example, the one that's still ongoing right now, I'm proposing that we do a 10-year interest only, just so that he doesn't get a big tax burden. Can you tell me some examples that you guys have structured?
Yeah.
Great question, Jason.
Yeah, actually, I like that one. So every deal we've done is different. My very first deal ever, it was 30 years, no balloon, fully amortized. Think about it like it's the typical home loan. It was basically a home loan on a 12-plex. There have been deals where I did a 30-year amortization with a 10-year balloon. And it would just pay itself down over time, and I eventually have to pay it off. We just did a deal recently, that 10-plex that I mentioned on the stage at Dealmaker Live. It was actually very similar to one in the example you just shared. It was interest only for 15 years. And so we've done a mix of amortized, we've done interest only, We've had interest only that'll convert into amortized 2 years down the road. We did that on our Pheasant Street apartments, where we did 2 years of interest only, and then it converts into fully amortized on a 30. And that gave us time to get the rents up, because they had rents in the 6s and the 7s when it should have been $1,200. And we didn't want to jack the rent day one on tenants. While we could do it, it wouldn't really be fair to them. And so we did a longer term IO period, which will then go to 30-year. And we've done certain special amortizations where instead of paying down the loan maybe $1,500 a month, we pay it down $4,000 a month because they needed to get a higher payment every month. So we just wrote it to where it was a heavy principal pay down. We did a deal, just throw out different ideas. It was our Seattle deal, 4.5% down, 3% interest. They wanted $250,000 down. Instead, we did $50,000 to buy a 7-plex in Seattle that cash flowed a few $1,000s net every single month. And they just wanted more commitment from us. What we did was do $50,000 down, 4.5% down. At the end of every calendar year, we'll do a $20,000 additional down payment for the life of the note. And we wrote the deal where it cash flowed about $30,000 a year. So that was net on day one numbers. The rents have gone up probably 40% since but we wrote it to where the real estate would buy the real estate.
The principles that we use do come back to those two questions. How do we own it? That is, what criteria match what the other party is looking for well enough where they want to accept that deal and it makes sense to them. I am not about over negotiating deals. It doesn't have to be a home run for me every time. I want to make sure what we write is something the other party is very happy with. Because seller financed, they're a partner with you. If you have a 10-year note, you're stuck with them for 10 years. You want them to be happy throughout the duration of that note. So how do you own it is, terms they're going to accept. And the second question is, how do you never lose it? Make sure the math behind that cash flows day one, and you get into long-term debt that you can manage. As long as you know how you're going to keep that property, those are the only two rules that we have. Outside of that, each deal gets as creative as it needs to be to get to the how do we own it piece.
So so it sounds like you got the default knobs that you guys play with first is a motivation and the interest only, and then maybe the down payment, and then if that still doesn't solve the seller's problems, then you look at other avenues that you could play with, right?
Right. That is exactly it. And you got that down. We just want to figure out how to make the deal work.
Cool.
Because if we can figure out how to buy it, I'm not focused on some standard model of purchasing. It can all be different.
Cool.
But if I can just figure out how to buy it and how to never lose a ton of real estate, I'm going to wake up one day with more cash flow than I can possibly spend. And that is the philosophy. And if someone wants $2 million for $1 million property, but they'll finance it 0 money down and they'll write it to where it cash flows $4,000 a month on a 50-year note, I'll do that deal. It doesn't have to fit conventional norms. If you can get long-term debt that has a phenomenal cash flow, a great debt coverage.
Yeah.
And if it doesn't cost me anything, then I can get super creative on how to make it work. I just have to know there's a commitment from the other end, because if there's a commitment from them, they'll get a commitment from me.
Fantastic. You guys are amazing. We could talk all day long. Dean, do you have any questions? You always have questions. What do you got, Dean?
So congratulations, Cody and Christian. I bought a 46 unit in 2009 with seller financing. So I know all about how exciting that is. My question to you is that what on average, from all these acquisitions that you've got, what would you say is been the median initial investment % down that you've used? And what would you say are the term, the years, the number of years? And then I really liked that, also that last comment, I guess you made where you said you're increasing the down each year. And
Yeah.
That's a very creative way of getting the seller to buy in. So also elaborate a little bit further on average, what's the percent down, how many years, and what is the escalator in this down? And if there's a balloon at the end too.
Yeah, it's usually 10%. And I'll talk about this because I'm more of the numbers guy on the team. Christian can do it. But usually we're doing 10% down. And usually we have to figure out how to borrow the 10, because out of 8 figures in real estate and about to be a couple more 8 figures in real estate, I will have been out of pocket $10,000 without syndicating. So we're doing 10% down typically, but we're also figuring out how to borrow the down as a lien on title so we can get into stuff with next to actually no money down. The term on the seller note usually is double digits as far as years go. So I'm typically 10 to 15 years. I got stuff as long as 30. We've got stuff as short as 3. But our rule for notes today, we're only going to take on a seller note if we can pay it off in the term when it balloons out of our cash flow. And so we've got 4 years left on a $1.7 million note. We could cash flow that. We could, like, without a doubt, we could 100% cash flow that in 4 years. And so that is the way that we look at assets today, which is a little different than in the beginning. If we're doing a short-term note, like the 3-year note, we could pay that off out of cash flow alone. And it's hard to do that in your first deals, but that's something that we've evolved into is, okay, whether it's a 10-year note, a 30-year note, a 2-year note, if it was IO, could we just write a check for it out of cash flow? And that is
so much creativity. All right, last one, Prasad, what do you got?
Oh, yeah, what about the escalator, please?
Oh,
What
so
about the
sorry.
escalator?
Oh, so you mean like interest rates going up over time, or what?
No, you said you increase the down each year.
Oh, that's just an additional principal pay down. So
Hmm.
we have it written into promissory note that says at the end of each calendar.
So what percent, what more, you said 10% is average, then how much more are you adding on pay down?
Yeah, so we bought a deal for $1.1 million. We put $50,000 down. At the end of every calendar year, we do $20,000 additional for 5 years. The resort that we're buying seller finance right now, that one we're doing $450,000 down is what we offered, with $225,000 each year of additional debt pay down, and the property can afford that.
Great, great. All right, Prasad, last one, because we got to get to networking.
Hi, Cody and Christian. So 2 questions. One, in scenarios where the seller has a note in first position, but the property is appreciated in value, right? So how do you structure your seller financing deals in such a scenario where the loan is not assumable, right? Or if it is assumable, like, basically there's a first position loan, right? And the second question is, how are you sourcing the down payment, whatever down?
Yeah, so I'll let Christian talk about the down payment, but as far as seller financing when someone has a first lien mortgage that's not assumable, a couple ways around that. You can have them seller finance their equity in second position, get a small credit union or private lender to finance it first. It's probably the easiest way to do it with no money. Another way to do it that we've done it, and I don't know that you can do this in all 50 states. I know you can do it in Washington, is contract for deed. And if you're not familiar with contract for deed, the basics of it, and you should do some research because there's some nuance to it. But essentially, you go on title. I actually like this a lot more than subject to. A lot of people that like sub 2, I like this better because I've found it's a lot better. But you don't have to pay off liens necessarily at close. You go on title. The seller has legal title. You have equitable title, and depends on how your contract is written. But we did contract for deed on a deal. We're actually doing it on the 87 unit purchase in Moses Lake because they have 7 figures of debt on the asset. But the way that the contract is structured, we go on title with them. They don't have to pay off their loan. And so it's similar to a real estate contract, but you can get into deals. It's essentially seller financing, except for there's not a promissory note. It's an actual contract. And then when you sell, it's recorded as a contract of sale. And depending on how it's all structured, again, you have to have a good attorney for it, but it doesn't necessarily call loans due.
So the first position lender, do they have to give the permission for this arrangement?
It depends how it's structured, because there's a lot of different ways people structure real estate contracts. Not always.
And,
All right,
and the
that's
term you
good,
said
yeah.
is contract of deed, is it? Contract on deed?
Contract for deed.
Yeah.
Got it.
Yeah. And it's something to look into. That I prefer more often than not just to do promissory note and deed of trust. It's very simple. Bring your title. I like it that way. However, we've done contract for deed on 3 duplexes and 2 triplexes and about to be 87 units. So once we go through the 87, that's a different asset class than the duplexes and triplexes. So we can speak more educatedly on that. We're not quite there yet. We're going mutual on that, hopefully tonight or tomorrow. But as far as
So the other option you mentioned is like promissory note and deed of trust. So you're essentially assuming the first position loan also, and you keep making the payments to the first position loan as well as the seller's second position until it's paid off.
I wouldn't assume somebody's loan. I don't like to do that. So what I would do is I would have the seller finance in second position behind a small credit union or a private lender. You could typically do deals like that where you have a private lender who will fund a first position up to maybe 60%. You have the seller finance the other 40 or even up to 50% if you want. So you can get a check at closing for 10-15% of what you buy it for, but you have to have a plan because you don't want to just go leverage just because you can. It should cash flow. If you're doing that with a private lender, it may not have to cash flow. If you're doing it with a credit union, it will, and you're gonna have to shop that around because not everybody likes that. But that you could do seller second or seller first or contract for deed or real estate contract. There's a lot of creative ways, but regardless, you shouldn't do any of them until you really dive.
When you say private lender, are you referring to hard money lender or?
Yeah.
Yeah.
Think of a hard money lender.
All right, Prasad, we've got that one question. Did we get that covered? Christian, were you gonna?
Another question was, where are we finding the capital down payments? Great question. It's the same way that we are finding deals where we just met with a ton of owners in any given city. We just meet a lot of people. We tell our story and we're connecting on relatability goals and the significance behind those goals. So we have a whole arsenal of people who have different goals, different capital positions and different real estate positions. A vast majority of the capital that we have brought in are people who either want to be associated with deals that we are doing, and so that we'll bring them in as an equity partner with a buyout clause. So hey, here's a way to multiply your money in our deals. Come into this deal with us, buy you out in the future at usually a pretty steep buyout. And that's one way we bring it in, or we'll raise it as debt. And again, some individuals are just like, hey, like we have some wholesaling friends who they've done really well in wholesaling. It's not our model, but they have an issue where they're like, well, I make a lot of money, but I don't do a lot of real estate. When I have this money, I need to place it somewhere, and I'm not good at holding real estate. So people like that tend to be a really good debt source where we can go to them for a down payment and say, hey, we have this opportunity. Again, it has to cash flow even with the more expensive money, but we'll bring it on as debt. And those are typically going to be a little bit more expensive, 8 to 12% often. They're usually shorter term, but that is how we'll raise that capital, the exact same way we find opportunity. We just meet a lot of people, and instead of going after the deal, we learn who they are, what they're trying to do, and why they're trying to do it. As long as you've mapped that correctly, you can match the right people to the right opportunities.
Amazing. You guys are awesome. One more time, somebody asked, how do we get a hold of you? What's the best way?
Yeah, so you can look us up on YouTube, Cody and Christian Multifamily Strategy, or just search our name. If you want to find our phone number, you just do Cody Davis phone number Tacoma, and it'll probably pop up. Same with Christian.
I know for a fact mine pops up all over.
Yeah, everybody's phone number's on Google. So
Awesome.
if you Google that, we're there. Add us on Instagram.
Yeah,
Cool.
Cody 2020 at Christian Osgood.
Awesome. You guys are wonderful. It is a wonderful pleasure to have you back, Cody. Wonderful, Christian, to have you on board. Great partnership. I'm very excited to have you back next year to hear more successes. I think this was amazing for the people that haven't met you before to get a sense of, okay, what are you doing? What are you doing differently? And how can I scale my business? We don't have to always get into syndications. You guys are doing something different. I love it. And I wish you all the best.